It is Friday. Welcome back to Stock Market Weekly. I'm your host, Evan Medeiros. And markets out there this week were pretty tiring, kind of still just range bound, chopping around, not making a whole lot of directional movement at the top level index. But there were some notable pivots underneath the hood, namely software, which saw a bit of a flush to start off the week and then a recovery. We also had semiconductors, which had been a very firm foundation in this bull market. And there's a little bit of a crack kind of forming here after Nvidia, of course, and plenty of other moves. So let's get into it. Our sponsor of this episode is Investors Business Daily. We have 2 discount links in the description of our YouTube video. Once you get done watching this episode, check out those discount offers to their Market Surge and their IBD Digital subscription. All right. Nvidia will start off here this week. Reported earnings $68.1 billion. That's just this quarter. That's up 20% sequentially from the prior quarter, and it's up 73% from a year ago. Numbers were basically a blockbuster. They checked all the boxes. The stock, though, sold off. And this is where, again, this always confuses, I think, folks, especially newer folks, where, there's this study or this saying where you could have perfect information. You could know that Nvidia was going to have the numbers that they did before the print. Would you get long or would you get short? Would you buy it or would you sell it? And if you saw those numbers, you might say, yeah, of course I'm going to buy this stock. This is records across the board, reaffirming guidance. Things look good. Margins are strong. And the stock, of course, did the exact opposite. So positioning was already there. This is another point of frustration, I think, in this market. Nvidia had been, of course, the biggest leader, the biggest winner this cycle in this most recent part of the bull market. And I think this weekly chart, which you're looking at right here, just speaks to the frustration. Investors doing any type of discounted cash flow or fundamental analysis are going to scream that Nvidia is, criminally cheap from the amount of profit that they earn, and the stock just can't get out of the mud. But the market seems to be maybe just hanging on to this future boogeyman that the profit, the margins, everything underneath this AI trade is not sustainable. So here we are, big range. It's going to be fantastic, viewing here when we finally get a breakout, either to the downside or up to the upside. All right. So that leaves semiconductors. This is the SMH, putting in a little bit of a topping candle here. You can see volume picked up a little bit. Again, semis not as flat. There's obviously in the SMH, there's weightings to a lot more companies than just Nvidia, but Nvidia is the biggest. And so we've had more of a directionally up grind, recently sideways. And again, this has been one of the brightest spots right now in tech land, right? Hardware strong, semis are strong, software weak. And so we're seeing this now just get a little bit of hesitation here. Another big news story that made the rounds the end of this week was Block, formerly Square, announced massive layoffs, some 30-40% of their employees, 4,000 getting sort of immediately a cut from the company. And there is a blog post out there from CEO Jack Dorsey, which talks about the rationale, but basically it's AI. And, talks about the fact that he could grind this out into a very long sort of, purging of employees, or just get it all over with at once. And you can read that for more information. But of course, the market is looking closely at that. And from us, the trader perspective, yes, shares didn't finish up 24%, or at least not last I looked, but they certainly got a big pop there, which again gives you a little bit of concern, because if other CEOs are seeing that the market is enjoying basically replacing the humans with the AIs, then some other companies might follow suit. One of the best looking charts this week is 10-year Treasuries, IEF. Look at this, nice base breakout. We talked about this, getting underneath 4% for the 10-year Treasury. That's exciting. Also, in terms of news flow this week, was OpenAI on Friday, I believe this was, announced a new funding round, $110 billion, led primarily by Amazon, also with Nvidia, and then SoftBank. Trio here raising $110 billion, a massive sort of raise here for OpenAI from very strategic, key, big, large players. And so that should, again, give some fuel, but also speaks to the amount of money that is racing into this competition. Now, one thing we haven't really spent too much time talking about was some of the private credit issues. And I'm bringing it up this week. Maybe this was a capitulatory week, but we saw a lot more weakness here, and it feels like we're getting, kind of really pulling on some of the bigger concerns now. The true story here, I don't have the full details, but basically with these private credit stressors that we've seen, it really comes down to just sort of a lack of privacy and then some redemption controls that were kind of put in place here. Do some due diligence on this. This is obviously going to, credit anytime there's issues here. Everybody kind of, shoots first and asks questions later. These stocks continue to get hammered this week. Maybe you're washing out now, but with credit, it's always a little spooky. We can look at some of these charts a little bit later. Last but not least, IGV. Here it is. We talked last week about how much, I hated the way software was trading and looked. It looked like a continuation pattern. I wanted to see a flush under those multi-year lows. We did get that this week. Heavy volume. I was hoping for more of a flush, to be honest, but we briefly just undercut some of those prior lows. And then we saw this nice snapback reversal. I wanted to see a close over 81. We basically got it. Still looks a little ominous for a few brave dip buyers that are looking for tactical opportunities. You might have something to work with here. The volume is certainly notable. Let's take a look at the market performance this week. Gold, top of the list here, 3%. Russell 2000, bottom of the list, down 1.4%. Everything else kind of mixed, but equities down across the board. S&P 500, just chop. Look at this. This is a 3-month view of the S&P 500. This looks like a bunch of vomit here. No movement, no trend, just chopping, churning, rotating under the hood. Here's the VIX going up around 20 to go into the weekend. We still have fears, of course, of the U.S. and Iran situation. That's keeping everybody on their toes, I think, especially on these weekend periods. But amongst other things, we have, again, a little bit of an elevated VIX right now. Dollar index kind of flatlining here, still trying to pick its direction. But this is the 10-year Treasury. It is below the key 4% psychological level. It broke down this week, hence the move up in IEF. This is nice to see. This is good for your, growth companies, your companies that need debt, that need to refinance debt or capital or cost of capital is important. Then this is definitely going to be a bright spot for those specific companies. Here's the sector performance this week. Note that the indexes were basically all down, but when you drill under the hood, there were winners, but mostly defensive. Utilities, staples, energy, healthcare, those were your top leaders. Financials took a big dive this week. So did tech, and those two are typically enough. And then throw in communication services. That's enough to bring down the indexes, and that explains really the full picture. Breadth under the hood, though, there are lots of sectors. The way we model strength here underneath the hood with our smart trend filter indicator, things are green. Breadth is good. Uptrends have been in place for some time, and that's continuing. You do have a handful of sectors that are kind of in these crossroads right now, but that's basically it. There's nothing on an outright sell signal for us. I guess, we usually give the benefit of the doubt to the prior signal here, which in most cases in this view would be a sell signal. So these are kind of, bearish to neutral outlooks. Healthcare is certainly on the bullish to neutral outlook, is the only one that stands alone. 52-week highs and lows. Okay, so we're back to, kind of flatlining here around 200 or so. And, generally speaking, I'd say that's pretty decent. It speaks to, again, a market that's spread out a little bit. It's not just the Mag 7. We're not quite up at the 300 to 400 range that we saw coming into February, but if it can stay around these levels, base, and hopefully see some breadth expansion with other sectors taking the lead, I'll take it, especially if the number of stocks hitting 52-week lows stays down there. Bitcoin. So Bitcoin was certainly a frustrating one for me. I kind of got chopped around in this trade. So like I talked about in my last video, I was long Bitcoin, came into the week, and that was the sell pressure that we saw, this big down day on Monday in Bitcoin. And so I did, the good part was I risk managed right away. I was using 65K as my general stop, and I took the position off. But then on this Wednesday, when we started to rebound so aggressively, I kind of chased it back in, and then I had to stop myself out again. So kind of a strike, shame on me for getting a little bit of chopped up. I mean, I did follow my rules. I contain risk management, but it's a choppy range. And, I'm just trying to be tactical in here and trying to catch a little bit of a move out of it. And so far, so wrong. So correctly so, our long-term models are still disengaged from Bitcoin, basically got sell signals a long time ago, frankly, and have not been involved since. But me trying to play a little tactical, cute play here, getting slapped on the wrist. And what else? Next week is non-farm payroll. So unemployment, this is going to be a biggie for econ data. So let's pay attention to that. And I think that's it. Let's get into some charts now and take a look at what else is going on. All right, we got some charts in front of us. This is Warden TC2000. This is the S&P 500 cash settled market weekly time frame. Nope, daily time frame. Each bar's a day. I don't think we need to spend a whole lot of time here, because if you've tuned into the last few episodes, it's kind of the same analysis, right? We're still waiting for direction. We're still waiting for a breakout. There's a lot of energy stored up in this market. And so that will release soon, right? Probably sooner rather than later, but we might need a couple more weeks left of chop. Nvidia results, at least immediately, were not the catalyst to release. When we look at the S&P 500 here, I'm going to keep it very simple. Below 6,800, we start to worry. Above 7,000, we get happy, right? I mean, as traders, it's kind of that simple. We're waiting for a continuation pattern, or we're waiting for a topping pattern to confirm. We don't want to argue too much or get chopped up too much in this range. And so less is kind of more right now. And it should be again stated that there are certainly individual stocks under the hood or sectors that are just a lot more interesting than the index. Let's take a look at the QQQ here. This again is just so messy. It's gone nowhere. It's sideways. It's chopping around. Even this weekly candle, I mean, this is about as indecisive as you can get. Just a flat close the market exactly where we opened with a high to low 3% range. I mean, it's just a terrible, kind of swing trader directional index market. You have to go under the hood to some other things. So again, below 600, below 595, you start to get concerned of the rollover. Every time we get down there, there's no follow through. And so again, in this range, we stay. Russell 2000, same thing. Its range is, shorter in duration, just the last few weeks. It is still looking and holding up the best probably out of all of them, but still it is quite directionless. So I won't really spend any more time there. We talked about the VIX is elevated right now, going out close to 20. So there's some fear in the market that makes things tougher to break down too, and everybody's got protection on. And so these are all just kind of the little things that really we're just waiting on these market dynamics. Gold was the big winner this week, up 3%, highest weekly close. Daily, not quite the highest daily close, but it is grinding up. It is finding support and it is working. This is still an overweight for us in our all-weather portfolio. It's been that way for a couple of years and we stay the course. It is still working for us. And so if it ain't broke, why try and fix it? So we have our stops in place. They're rising. We have protection on. And we're doing all the as responsible as we can be for this overweight position. Oil also higher this week. So on the weekly time frame, you can see it did have a pretty good range. Again, this is tied to Iran and some of the tensions over there, because this is going to be one of the more natural spots. Is if there is an attack or any type of escalation over there, then the supply of oil and certainly can get tightened. Let's take a look at IGV, right? So IGV, was very vocal kind of last week saying how much I dislike software and that it was likely to turn lower. It did have a rough start to the week. It was down 5% on Monday, and it did just marginally take out the tariff lows here, the April lows, tested just below them, and then it found a bottom, reversed, and had a pretty strong finish to the week, to be totally honest here. I wanted to see a close. I posted on X. I wanted to see a close over $81 to get a little more confident about the short-term low being in. We got 81.57. Maybe we get a trade now back to the top end of this range up into the high 80s, and then we start to chop around and really kind of figure out what's what. But for now, I mean, it looks like maybe the worst of it is behind us. Good volume in. I still don't really have any horse in this race. I'm still watching the sector. I told you, Net, Cloudflare, a couple of others that I'm watching, but I don't have positions in them. I just want to see just a little more settling before I take a stand here. We also mentioned Oracle. Notice Oracle did not make a new low. It did trail off, though, a little bit on Friday, but Oracle, again, kind of at the center here of the AI concern, let's call it, on its debt and its reach, its extension in its investment. And you can see, again, didn't make a new low, but we do really need to see it move over 150, 155 or so to get a little more excited. So while software is trying to bottom, hardware semis are looking like maybe they have a first kind of warning shot across the bow here, losing this 420 area. Again, I'm not going to make a big deal out of it right now because it's still in an uptrend. It's had lots of, kind of multi-day pullbacks, and then it kind of collects itself. The trend hasn't been so smooth. So, we can still give this the benefit of the doubt, but the volume pickup and the thrust back below 420, something to pay attention to. And this is Nvidia here. So again, one thing that should be noted is it did run up into its earnings. So it was up 10% or so into earnings, and then it sort of mean reverted back, lost 10%, right? So back to 180, back to the middle of this range, just like the Qs, just like the indexes. We want to see some type of resolve here. Weekly chart, heavy volume, right? Bearish engulfing bar, and doesn't look so pretty, but in a range, it's tough to get follow through. So we'll see how this all gets followed up. I think that's pretty much it. XLV, I think, is interesting here. I posted this chart on X. I mean, take a look at it in terms of its relative strength in Friday's session. It's been going nowhere for some time. I mentioned that, this could be the next rotational safe haven. And maybe this is starting right now of a new leg up. So something to pay attention to. I'm going to leave you with a few or some insights into our trading systems over here. So we've got our all-weather Galahad portfolio. This was Friday's numbers. So S&P was down 0.44. Galahad was up. Thank you mostly to GLD and healthcare, actually, both positions in Galahad. Performance on Galahad beating our benchmark pretty nicely. So that is wonderful to see. Let's take a look at our momentum stocks. I got three I want to show you on our chart book here. So the first is COHR. I bring this one up. We've been in it for a very long time now. So we originally got involved in this at $133. So back here in November timeframe. But I bring it up because, it did show a good amount of relative strength. The structure is still intact here. And we did get a nice kind of like recovery and a strong close on Friday. So I think this one's interesting. Again, this is squarely in data center and CapEx build out. We've hit all our profit targets in it. Our current stop loss is, generally speaking, we don't use hard stops. We use kind of exit zones, but 220 or so is what we're going to be looking at for that one. Here's SITM. This one's an interesting one. We got involved in it more recently around 363. We did hit two profit targets already, so we've already scaled some of this out on this initial pop after earnings. But the consolidation here, the pullback, like you can see, is kind of nice, where it's kind of flagging back down to the old breakout zone. And so I think it's kind of interesting. We have a tight stop at this point, just above our entry price, but our next target's up here at 468. I think it could present some opportunity. And here's kind of the wild card. This is Circle. It's the first time we're trading this stock, first time it's showing up on our model. This was a recent entry, post its earnings. So 83 bucks, where here our current exit would be around $67. And we're trying to get all the way up here around 127 for our first profit target. So this one's a bit more of a stretch, more of a, kind of wider risk, smaller position size type of name here as it tries to turn around and make a bottom. A little more speculative. Again, we're recently in it, first time trading it. And so tied to crypto, of course, and we'll see if this one can work for us. So those are 3 ideas coming directly from our chart book. This is our new feature that has all of our trade management overlays built entirely in, and we have more opportunities on our watch list, but those are or on our positions list, but those are the only 3 on my watch list right now. So that's it. That's what I got for this week. Again, just kind of more of the same. So we'll try and keep things tight until we start to see more movement. There is opportunity. Again, build your shopping list right now. There are stocks getting hammered. My list is building. I could maybe do a separate video on that, but I don't really want to take a whole lot of directional exposure right now. I want to keep things kind of light until we see more of the intentions of the market. So I hope you found this video helpful. We got links in the description of the show. IBD, our sponsor, our trading system, Galahad, our all-weather portfolio, and Quant Rockets is our momentum model. Check those out, see if they can be of assistance to you. And until next week, thanks so much for watching, and we'll see you next Friday. Take care.